Foued says, is option liquidity important for opening a married put position? I don't remember mentioning in the blueprint, but I noticed that buying protected put has wide spreads when far out in time. Any thoughts? Yeah, you're going to see that because there's not a lot of activity far out in time. You can see here from this basic search, the current volume on these is very limited, and some of them don't even have good open interest, but we see good open interest on Uber. Not saying that's a great recommendation. Good open, sorry, I have it perfectly set where I can't scroll. So let me change my column so we can get a better look at this. I'm going to take out some of the least important Greeks here. We'll leave, I'm going to take gamma out too. And good. That's a little bit better. Okay, you can see a little bit more now. I should have moved. I'm going to move open. I'm really sorry, Foued. I just, let me change the columns here. There we go. Put those closer together. Okay, now, first page alone of the 47 results. Very limited current option volume today, Hyatt and Mobileye Global. Reasonable open interest in a lot of these, but none in others. That's interesting. Granite Construction there has a current volume, but no open interest. That'll update on Monday. To me, the daily volume the option volume, is not important because you're right. You're not going to see a lot of activity compared with the weeklies or the monthlies as we go for the range we want, 6, 7, 8, 10 months out in time. However, if it's important, look at the open interest. If in general you're trading 200 or 300 shares, I'd look for maybe 2 to 3 times the number of open interest. So 6, 9, or 10. Open interest is greater than 10. You know there's some trades out there that have that. Some of them have liquidity here. What is that? Hyatt. That's Hyatt again. I'm sorry. Apollo, nope. Allegro Microsystems. Floor and Decor. I thought I saw Deere in there again. I guess I was wrong. On Semiconductor, good option. That was a successful married put trade for me a few years back. Green Brick Partners, interesting. Open interest, it's only 13, but the volume today is 11, so it's almost even. Monday, of course, it'll update to 24. No, I think it's already. I apologize. I think it's already updated. So this was 2 before today. I apologize, and I think with this 11. No, it hasn't, because that other one was 1 and 0. So I'm going to stop talking now. But there's still 23 results that have a good open interest and liquidity. I'm sorry, open interest at least. Liquidity, maybe not so much. But again, you see some ones here that have good ones. You can customize the search any way you want to, Foued. Is it important? In some cases, yes. But in other cases, no. So today, let me just go ahead and sign in here. I just want to review this while we're here because I promised I would. After that decline that we saw with Annette after the earnings, I did another adjustment recently. There's the earnings play that I mentioned. I did that on February 13th. We rolled the put back in time to bulletproof the position of 4.2%. The did income method number 6 to leave the upside open, get income before earnings. The stock fell. The stock had good earnings and it went up, but it was a bad market day the next few days, the 15th, 16th, and 17th, if I'm not mistaken, and it pulled back. But then it moved back up again, and today I sold that call, the 142, at 126. Now, the reason why I did that is because I don't want to roll up the put anymore. March 17th. So all I'm doing now is milking this for another $1.20, $1.50 for the next 2 weeks. If I get assigned next week at 142, it'll be about a 8.2% return. I'm sorry, it'll be about a 9% return, 8.9, because the stock will be at 142 instead of 140.68. And we're still bulletproof to 6.2%. However, if it just stays right below 142 and this expires, I'll sell the 140 or the 142 call for March 17th, get another $1 premium in. Okay. Why I'm going this way, which is not related, you might say is not related to Foued's question, and you could say, well, you said you weren't going to go off on a tangent, is because this stock is bulletproof to 1.4%. I'm holding the 52.5 strike put that I rolled up to get that bulletproof status rolling. And as you can see, the stock's at 44.70. I'm too deep in the money. And on this position, I made the ANET adjustment today. I made an adjustment on Schwab today. I rolled down the put that I wanted to do as well. Thank you. Sorry, Kip. Let's go back one. So what I was saying here, my apologies. What I was saying here is that on Arista, before earnings, this was an earnings play. We moved the put closer in time to the 140 strike of March 17th. And I did a shorter term income method number 6, which brought in income, left the upside open. We got in about $1.30 in premium. That put us at 5.2% bulletproof status. And then, of course, earnings came out, as I mentioned. The stock went up, but it came back down because the market conditions were bad. You saw in the chart we looked at a while ago, it was only at 135, 136. The entry on February 22nd, we would have been at 135.21 at the close of the day. But now all I did was just simply sell the March 142 call with the bump up today. I think I did it when the stock was at 139.20. And this brought in $1.26. So again, we've taken the bulletproof status to 6.2%. It's guaranteed. And if it moves up and gets assigned, it'll be at 8.9. Right now, if the stock stays at 140.68, that's the 8.2% liquidation or at expiration I was referring to. So again, the plan is just I'm already bulletproof, guaranteed 6.2%, potential to make 8.9% if the stock's at 142 at the end of next week. If it's below that and expires, I'll sell the 141 or 142 again for another $1, $1.25, $1.50. I'm not going to move the 140 put at this time. To give you an idea, and I mentioned this to the Fusion subscribers, the liquidation when I did this was about that same price it is now, 7.4 or 7.5%. That was when I had the guaranteed profit of 5.2% bulletproof status. I'm sorry, here. Now, by doing this, I guarantee 6.2% if the stock's below 140 on March 17th with a potential to make 8.9. So I'm okay with that, right? Giving up potentially 1.2% from where I was right now to potentially make 1.5%. Nope, sorry, folks. I'm good with that. I'm comfortable if I only make 6.2% on this position. I'm comfortable taking 7.4. I'd love to get 8.9. But you know what? If it expires, then I'm going to sell it again, get my bulletproof status probably up to minus 7.3, 7.4%. Okay, now, how does this relate to Foued's question? I also did an income method number 9 on Schwab because I felt it was close to a bottom. I might have timed it wrong. I'm going to be honest with that, but I said that in the brief. But it was Newmont Mining. This is the position now where, the stock is currently closed today at 44.70. And I rolled up in January to the 52.5 put to start the bulletproof status rolling. Did an income method number 6, got some premium, rolled up the short call of the income method number 6 to get more to bulletproof status. Those expired worthless. On March 8th. Wow. I'm staying in this position right now because on March 8th is a dividend, I think of 35 cents, if I'm not mistaken. My liquidation right now is 2.8%. But this is still far out in time, right? This is still out to June. Why this is important is because just because of today's movement, it wasn't that I just decided to do these on Friday or Friday's the only day I look at my married puts. I wanted to adjust all three. I adjusted ANET by getting the call I wanted when the stock popped. I thought I saw something in Schwab with the move today where it looked like it was bottoming a little bit. I'm not sure if I did it right. There might be more room for downside here, but I did roll down the put. Originally started this position with a 7.1% risk, used income method number 4 to the 82.5 strike to take it down to 4.4, and I just lowered it back to the 80 strike. I'm back to where I started with 7.1% risk, but I have a lower cost basis and a lower break even. And I'm going to look to do some income methods on that too. A much better bottom was on ANET. Sorry about that. There we go. I'm sorry, folks. Wow. NEM. I'm really sorry about that. There we go. Last 2 weeks ago, I mentioned the income method number 12 opportunity where this would have been a double-digit profit, almost 18 or 19%. Had I properly followed the MACD and when the stock fell below the 20-day moving average. See, I hesitated on doing a 12 here because it started to come back up. But yeah, right around in this area. If I had done the income method number 12 there, bought the extra put, this would have been around an 18% return. As you saw, it's 2.8 liquidation right now, 1.4% guaranteed profit. This is what I was looking for. This is what I'm looking for. This to start doing this, that positive MACD crossover. I'm going to lower my put into this range. It's going to move out of bulletproof status from a guaranteed 1.4% profit to a risk of 1.1%, and I can cancel that by selling the lower strike call. This put option has a great amount of open interest. Let me get back to the portfolio. I think it has 2,329 open interest for the NEM position. Wrong portfolio. All right. So I'm in the March, as I mentioned, 47.5. I'm sorry, that's not it. I don't think that's it. I think I'm at the 52.5. It's not recorded here properly. Let's go to the option chain. This is the webinar account, so sometimes I forget to update it. June. There we go. All right. I'm puts only? That doesn't look right. Let me go back. I'm missing something here. I'm not looking at the right strike. June 52.5. That's the put I'm in, yeah. I'm sorry, folks. Oh, that's why. Okay, June. Oh, it didn't. I just wanted to see June. I don't want to see that one. That's why. Okay. It's Friday. It's getting late on me, folks. I apologize. There it is. 2,942. I should have tried it at the end of the day. That's much closer. Where I'm going with Foued is that this has a great open interest. I had 3 orders in at different times today to sell to close the 52.5 and go at one point to the 45, where you can see there's a lot of current option volume, or the 47.50, where there was a lot of volume. It never triggered. It never triggered. With this much open interest, no one was actively doing anything with this. I wanted to sell to close this and move down that income method number 9, same as I did as Schwab. So even though I have good liquidity, and even though liquidity is good all around this position with today's movements, we're starting to see that bottom form with the MACD. I could not get filled at the price I wanted on this put, and I was frustrated. I'm going to try again on Monday. Okay. So where I'm going with this is, even though if you see good liquidity in these cases, good open interest, and options around it during the day are having good volume, it doesn't always mean that yours is going to fill at the price you want. Maybe I was being a little too greedy. I probably was a couple times, but then I curbed it by mid-afternoon. Still didn't get what I wanted. Got to fire again on Monday and try to get this position filled. If the stock continues to move up a little bit more, it goes up to 45.10, 45.50 on Monday, hopefully. I'm going to be targeting that 47.50. If not, I might stay at the 45 and then do an income method right away on that position. So again, using the search tool in the married puts, if you typically Foued or just trading 200 or 300 shares, put in at least an open interest of 2 to 3 times of the average number of shares and puts you would buy. Give yourself some open interest. You know the option volume is going to be relatively low because of the far out in time options. That's okay. But even when you see good open interest and good activity around it, doesn't always mean you get what you want. And as much as I say we usually get filled at midpoint, I was trying to push it a little bit beyond midpoint, which was silly. It was greedy. That greed pays sometimes, right? And then, like I said in the day, mid-afternoon, I cooled off a little bit. The bid-ask spread was wider. I didn't check this after 2:30 p.m. 2:45. I'm sorry, I didn't check this after 2:45. I just said, heck with it. I got other stuff to do, more important stuff for you all to do. And I just backed away. But seeing it closed, it got close to the close with only a 10-point spread, 860, 865. I probably would have taken that and gotten filled on it and moved down to the 45. I think might have still been my target, even though it's at the money. And I don't like buying the at the monies, as we just talked about for 2 different discussions. But I was okay with the risk. The risk, if I went to the 45 when I was watching it, would have gone up to about 2.2% from the 1.4% bulletproof status. This is just a risk of 1% for 105 days out in time, with the lower break even and better opportunity to sell more premium to get back to bulletproof status. So I really was trying to target that 47.50. But Foued, as you can see, there's good liquidity here. There's good current liquidity on the options surrounding it. I just didn't get what I wanted for this one. So even though sometimes when there's just one or two open interest, I usually get filled on the trade that I want. Sometimes the bid-ask spread is too wide, as you mentioned, and I don't get filled right away, but I keep trying or I move on to the next trade. But in the search tool, put yourself in that open interest field. Give yourself some open interest 2 to 3 times, maybe 5 times what you normally do. So, you know, there's some other interest in liquidity out there. Don't expect to see a strong volume except for on very active days, current option volume, or as you get close to a Friday expiration, for example, if people are rolling or adjusting positions even out to June and beyond.